General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hi there, welcome to this week's edition of Bulls vs Bears. Gentlemen.
Afternoon all.
Hello, Jonathan, hello. Kai. So Trump's he's got a deal through.
Yes.
Albeit with the only country that he actually would have had negative tariffs with had they and the I guess, you know, Britain's like the leper colony equivalent of trade partners, given they've given Brexit as well. So he's picked by far the ugliest chick in the room and, you know, gone for the layup and done a big presentation around it. But, you know, got a deal.
Yeah, exactly right. Well, I mean, like, that's the thing. So what surprised me about that is that the markets, like, they didn't really dissect it. Like, there were a few good analysts that actually went into the details of the deal and said it's actually, there's not much substance here. There's not actually, it's like we've made a deal and it's like very, very broad strokes. There's no actual, not huge amounts of specifics. So, but the thing is, the market reacted like, wow, it's we've got a trade deal with the world. So it just shows me, or shows me anyway, this market is just looking for any reason, any positivity just to rally. And,
until it's not. But the
at the moment, that's what it's looking for.
But look, I mean, fair play, very smart from Mr. Trump, or President Trump, whatever. There's many names for him. Pick the country where the least amount of different. It's pretty much gone back to he's moved the deck chairs around, and with the country that basically he is one of the very few countries they actually export more to than they import from. So smart. If from a marketing perspective, not a macroeconomics and political policy perspective, marketing 100%. Yeah, fair play. Marketing 100% mark or an A+, and then the rest of it. Look, I don't think anyone cares. No one reads through these things properly anyway. So,
well, I think what it does highlight though is that so Britain's the layup, and it's taken this long just to get a layup through.
Yeah,
and it's so if they actually do want to deal with China, that's going to take a lot longer, or just any other country.
If we're going to use a basketball analogy, China's the halfway line shot.
Exactly, and they've got to deal with 200 countries, haven't they? Look,
no, I know they were in talks with 200 countries, which
even though there's 190 that they want. Something like that. But either way, like
the Penguin sent an email.
Yeah, if that's how long it takes to do a deal with a friendly. It will take a lot longer to deal with everyone else, especially the BRICS.
Absolutely. Yeah, I mean, as I said, since Brexit, I would say in Britain in the newspapers that'd be their first trade deal since Brexit. They've only got like 30 to go to get back to where they were.
Yeah, exactly.
God, that was silly.
Yeah. Kai, you were on the call on Monday with Nathan. How was that?
Oh no, it was really good. I think it was a generally fairly positive episode. There was a bit of focus on. I was actually. This is one of the stocks we have in our coupon, actually, Stockland. I was like, oh wow, they've actually done pretty well for REITs. You know, it's not. You know, it's not definitely not a growth stock. It's not spectacular, but it's actually quite solid. I was like, oh wow.
Yeah, and that land bank, they sit around. What appears to be a premium in REITs because most of the REITs are trading 15 to 25% discount to the last valuation. But Stockland's trades it flat basically. But because they've got this huge land bank and there's no real valuations don't affect the NTA as much because without a house on it, it's not it's not anywhere near as volatile. So.
But I have noticed that REITs have been doing, just in general, they've been doing really, really well for the last few months.
That's right.
And
the other highlight
I refuse to put it in my J trader because I can't recommend a REIT for a trade. But they've been all trending higher.
Yeah,
Or with Goodman Group coming back off, everyone's actually had to find another option.
Yeah, exactly.
The other one to mention was Boss, with obviously the production update a week ago.
Mm-hmm.
Oh man, like they hit it out of the park.
Oh, did they? Okay.
Yeah, which is what caused the short squeeze.
Yeah.
So we thought that lithium shorts a year ago was it was 20% borrowed out for short. Boss, on a 5-day lag, 2 days ago, was 26.8% short.
Wow.
And increasing and it had increased on the way up after that production report.
Oh, wow.
So, and then there was a capitulation at $4.20 the other day. And then obviously, so for the folks at home, we'll explain something to you. So a margin call is the last call you ever want to receive as a trader. That means that
you have to get out.
Your risk manager doesn't care what the fundamentals are. You either get out or you're fired, or you get out and you're still fired.
Yeah.
So it was, you could just see it. It reminded me of my trading days. Like you could just smell the blood. Like
multiple days.
Oh yeah, and then once it was, and we sold. Some people had some bars, and we did a comparison, and it outperformed Paladin, and they both had great results, and they're both pretty similar. And it outperformed Paladin by 40% in like 2 weeks.
Wow.
And it outperformed the global uranium stocks by roughly 40%.
Because their cost stock production is so. I didn't realize it's only like $33, and there was something for $84 on
you
it.
go.
Like I was like, wow, like
yeah,
and not quite FMG margins, but not pretty good.
It's still pretty good.
Yeah,
uranium.
And there's a lot worse companies out there.
Yeah.
Life 360 has 12% conversion to actual paid, but the analysts love to have it at 1,000 forward PE all the time. So
the ratio, the price per likes or something?
Price to likes ratio, which I came up with. At some stage, shareholders generally, there's this little thing called profit.
Yeah, they want some money in the door.
You need
not just
money.
likes.
Yes, which I can empathise with. But that was, and then the moment, like once the buying, we were lucky to catch the end of it. I think we realistically, but we were very aggressive getting out, and then within half an hour, it went from 420 back down to 375 straight away, and there is no bid for another dollar. Like it'll come back to the pack, but I mean they're great situations where. I feel young again because it reminds me of my trading days. But where that trading experience is super useful because those who are in Boss got out of jail and you switch back to Paladin.
You can tell where the point of maximum pain is.
Yeah, and it couldn't happen to a nicer bunch of people. The short sellers are they're so predatory. No one feels sorry for them when they get cooked. Yeah. Like the Liontown was like people rejoiced. I think there was they almost had a ticker tape parade in front of the ASX when those guys got cooked on the takeover bid.
So stocks. The one for me today. Excuse me. So the main group takeover by CoStar from memory. $3 billion that went through today.
Oh, it went through.
Okay, so
because I've been asked. I'm not following it closely, but I've been asked a couple of times this week, obviously by the holders who are getting a bit nervous.
Yeah, so it actually went through today. So you'll get your full funds. Basically, you'll I forget the terms, but if it's for $3 billion, it looks like it's a cash deal.
Yeah, right.
Yeah. And what were the other highlights through the week?
Bushman, I had a look at it. It was like, so I think they're going to exceed their guidance. That's pretty interesting, right? Because it was a spectacular IPO, but they came off a little bit over but it's deep on expectations.
Okay, fair enough.
Yeah. I mean, look, that should be a university case study of how to best do an IPO. They marketed it well. They gave it to the right people. They held the escrow. They made sure that there was no sellers on the open. So basically, there wasn't enough stock for you can't borrow it to short or anything like that. So it was going to run out of sellers.
I think just bigger picture though is that because there's less companies going to IPO or to listing now, because the private market's so big now, is that the ones that do come on, they know the game. It's all about got to get that stock price.
But that was very, very well run.
Absolutely. All I'm saying is because there's less mature companies actually listing now. It just shows that there's a proven playbook now, and they play it well.
Yeah, and if the ASX continue to be like the world's most useless exchange, we might just start trading unlisted. We might have to trade unlisted private because everyone's either listing it somewhere else or it's horrible.
As I keep saying, ASX thinks they have a monopoly, but guess what? We can trade overseas.
Well, that's right. I mean, we basically now no growth stocks bother to listing in Australia, so we don't as a firm. If we're going to buy mining stocks, fantastic. We're going to buy banks, great.
Not much else here.
If we're going to buy tech stocks, well, we're going to the US, and it costs nearly the same. Like it's not that much different. And to be brutally honest with you, the fact that you've got more choice means you make better investment decisions anyway. That initial commission cost is negligible compared to the opportunity.
Absolutely,
So it's you don't go to a gun shop for to buy a banana basically. So and the ASX is the banana.
Yeah, I thought you were going to come up with something. Like you're going to America to buy guns.
No.
You don't go to Australia.
I got halfway through making that analogy and realised I was clutching at straws. So I apologise for that. I'm normally better off the cuff, but yeah. And then obviously. I think we had a couple of the retailers as well, JB Hi-Fi and Temple & Webster. They recovered, but basically they got hit pretty hard on Well, they met expectations, but they met expectations for a company with half their PE and half their forward growth expectations. So there was a little reality check. I think JB, and then the mindless green robot just ground them back higher again.
Well, that's what it does.
Yeah. So yeah, it's. But as a company CEO, same as was the GameStop. They should just be doing cap raises while they're overvalued. Like someone's dumb enough to buy your stock and overvalue you, do a cap raise.
Yeah, just give them a discount.
Yeah,
well, that's all it is. That's what it is.
They can give a 20% discount and still be a premium to valuation.
Exactly. So, so onto US stocks. So for me, we actually was it this week we started off Global Alpha.
No, it was last week.
Because
I think we gave Trade of the Week for Global Alpha.
Okay, but so for those that are on Global Alpha, Disney was the one that.
Well, that was today. Yeah.
Yeah. So one of the guys liked. So when Dave actually talked about Disney, I initially just thought of Snow White, and basically. Yeah. Disney has gone woke for so long that
did they have a black Snow White? She was mixed race. Sorry.
I think they had they had black Vikings in some episodes.
Yeah.
And they had a Star Wars with an all female cast.
The new Star Wars. I don't know. For me, I'm just a bit of a classics.
They're trying to wring every last drop out of that thing.
Yeah. They're doing spin-offs of spin-offs of spin-offs.
Yeah, absolutely.
But anyway, so the point with Disney was that they it did beat earnings, and then Dave just asked me, it's gone up another 3%. Is this the time to buy? And the thing with Disney is that you actually have to zoom out. Like if you just look at say the last 6 months, you're like, oh, it's kind of middle of the range. But if you zoom out, see where it's been, back in 2019, 2018, there's plenty of upside from here.
Yeah. Unless the rumours are true that Oprah's going to do the new Queen Elizabeth biopic.
Okay.
And then no, I'm joking. There's no rumours. Okay. No, like if they go back to that way, because I think Mark Wahlberg and Mel Gibson both they refuse to deal with the studio, and they're like, can't we just make like funny movies again? Like, and everyone just if you're going to be offended, don't watch it. So they got a big amount of funding for that.
Okay.
So they've basically started their own share because everyone's got sick of it, really.
Okay, good.
I mean, rude jokes are funnier. So,
And another one was DoorDash. So apparently I didn't know this, but so here in Australia, it seems that everyone uses Uber Eats. That's the main one. But apparently in the States, Dash is the incumbent. Like that's actually the main food delivery service over there. They actually had an acquisition, pulled back on the earnings, and it's actually at support. And then I think this is the level that we're going to enter.
I think Uber Eats suits Australia better because we have sprawling cities, not dense cities. So
are we based on? Isn't Sydney like LA though?
Not
quite like New York's
LA would be the outlier in the US, for instance. But I'd be interested to see the stats. Like Uber Eats probably does better in LA because you've got to have a car, and I think it's a lot of Uber drivers trying to just, if it's quiet and no one wants an Uber, they're trying to maximise. You can flick over and maximise delivering Uber Eats while you wait. So, whereas DoorDash is like, I think you're on those little bikes and but they're only doing probably a square kilometre, but there's loads because of the density in the city. So anyway,
that's the US stocks. Unless you want, go on the next thing. But the week, that's the S&P for the week. So for me, Apple's the standout. Obviously, just keeps heading lower, and Google as well.
Well, So there's so Apple pushed Google off the cliff this week, basically saying, which we have flagged before. The real risk is like loads of people now just use their GPT or Perplexity or whatever. That's you don't use a search engine. You don't go to Google anymore. Yeah. You just go straight to because it
and it pretty much filters all the. It's like you go to Google and you have to scroll. You got to find the right one.
No, so Google has an AI. Like basically, it's a default AI now. So when you ask a question on Google, it actually does a Gemini.
But Apple's turned around and gone, well, we're ditching Google altogether, and then obviously paying for your SEO optimization and ads and blah blah blah. Google ain't getting the traffic. It's an enormous problem for them. And then, Apple being, I don't know whether they want to try and have their own, they think it's a way to compete on a search engine level so they can get a cut of some of that advertising because
it's not an AI or search, right? It's like now they're so...
And they're down for they're the outlying down stock for like the fifth week in a row. I've been saying for 6 months, how the hell is this thing still up here? Seriously, they're 55% or something iPhone sales, and they've done nothing but put another camera on it for nearly 10 years straight.
And they've got to ship their whole entire supply chain from China
to India, which the day they announced that they were shifting to India, India and Pakistan went to war. So that's going to be a quick fix.
Yeah, exactly.
I will say,
and for me, Sir Warren Buffet, he's retired at 94. So obviously Berkshire is just dropped a little bit, but they're still sitting pretty.
The down 3%. That's just that's the equivalent of how much his launch service lead payout was, because it'd literally be like about 20 years.
Yeah.
So I can't believe they let him retire. To be honest,
Charlie was there till last year, wasn't he?
Yeah. Well, Charlie's dead, right?
Yeah, that's right. But I'm saying he was still working.
Yeah, well, I mean, toughen up, Warren. Oh, dear. I mean, if you're working till 94, I'm pretty sure, what the hell? He'll be so bored.
Oh,
he'll be so bored.
I'm sure he'll be just making random phone calls to whoever. I forget the guy who's taken over, but he'll be just like, hey, how's it going?
Exactly. And they'll end up hiring a team of actors to go to his house and so you can pretend like he's in the office. But no, I mean, obviously the healthcare sector, that sucked again. Basically Trump having a crack at that sector once more. But overall, in United Health, that's up there with Apple at the moment. They have two horrible stocks as it stands. And
is America getting healthy again? Is it, or what's going on with the healthcare sector?
No, but I got the slippery slope started when one of their insurance, the CEO or their head of insurance got assassinated.
Was that
in
outside the
street?
hotel?
Yeah.
That's right.
Hilton in New York.
So, they're not. Well, I wouldn't say they're popular. But yeah,
There's Disney 15%.
Yeah.
Well, it was up 10, and then that's when Dave was like, "Oh, should we wreck it?" And I was like, "Look,
in the Australian market, no, because that's
in the US,
15,
they
15.
they gap and go.
Yeah, they wait 15 before they have a crack. And Costco as well. We're kind of liking Costco quite a lot.
Yeah.
Again, it feels like it's bottomed out a little bit.
Well, Richie loves it, so and he's been buying some. And you look at the chart; it's trending higher, and obviously a nice green square there.
A nice green square indeed. We get no earnings next week, and nothing of any significance. John Deere, they do pay a bit of attention to. The JD.com, mate. Look, truth be told, there's not much there. US CPI, it's going to be quiet next week. By the looks of that. Alibaba might be interesting. They have put a bit of stimulus into the US economy, into the Chinese economy. Got a rate cut this week, and open market operations with liquidity. We're struggling really to make that exciting. I'm just going to, considering the weeks we've had. Wow, Toyota, good work, boys. They really dug deep to find that one.
What's the Chinese one?
NetEase.
Yeah.
Should we do a little what does it actually do?
What is it?
Yeah.
They make the NetEase.
Who knows? They launched 10G in China apparently. So we're going to be back to Trump basically. In CPI. Oh, you might get a higher than expected CPI number. That might rattle cages.
Well, there you go. Well, and then core PPI as well. So
I highly suspect that they put that in the wrong spot, to be honest. Maybe not. It's usually one day after the other.
Yeah.
But nothing really out of China, and so probably again pretty steady as she goes, right? What about commodities, JT?
So commodities. So gold is, for me, it's in a bit of a I wouldn't call it funk, but it was nice and strong at the beginning of the week. Rallied up to 3,400, but then it's almost instantly given that back in the last 2 days. Silver, copper, both range bound. Copper's drifting lower a bit. I think that's recession fears. Uranium's had a great bounce and continues. Obviously, with Boss Energy, the miners have actually done better than spot. But for me, Bitcoin was the one. So Bitcoin broke out. It's trading above 100. 100, we bought some at 97K yesterday. It's broken out. So we'll hold on to that. One thing is that as a store of value, it's kind of just held in there. During the April sort of volatility, it did get down to 76, but, I've been there, 2 runs where it's lost 80%. And,
76, that's like, it's asset class bar mitzvah. It's become a man.
Exactly. So it's held in there and and actually risen. So if it can just follow gold and sort of break out, I think it's going to get some good momentum there. And for me, the dollar index, it looks like it's actually strengthening here. So it was kind of weird this week. A lot of the Asian currencies all strengthened. So the Singapore, the Taiwanese. Not the yen as much, but it just shows that money is flowing into Asia. But then the US dollar strengthened at the end of the week. So mixed bag all around in commodities. I'm obviously still bullish gold, but I'm still waiting for some sort of pullback where because apparently it is the most crowded trade. So apart from Mag 7, where everyone's long there, the next most crowded trade is gold, and that makes me nervous. So I'm kind of just waiting for some sort of flush out. But what I have noticed is that, and I mentioned this last week or the week before, the gold miners, they all look a lot stronger than the actual spot price. And that's because
they're cheap versus the commodity they sell.
Exactly. If your ASIC's, 2,000 and you're selling for 5, what's the difference at 5 versus 4.8?
Well, unless you're Northern Star and you're selling at 4,000 and you're kicking yourself because you're missing out on the grand. But yeah, I was feeling like we didn't have enough of the gold miners on. But yeah, and I prefer to describe my gold long as a US dollar short, but I lack of faith in the US dollar, which I think Bitcoin is also really reflecting. However you want to do it, I suppose. But I think the miners is probably that's the safest way to play it at the moment because they're going to be high margins are going to be catch up, and because it will go with the underlying or probably even go through it. I think I worked out the other week. Newmont is will never hedge, so they 100% always 100% prone to the upside. Well, and the downside.
Yeah.
But that's going to be your best bet, I suppose. If you got to be careful because a lot of some gold miners have hedged. Like I was surprised at Northern Star, and I don't know how much they've hedged, but if you've got a loose cannon CEO who thinks the gold price is
I was surprised at that because I've just known them as great operators all this time, and then now maybe they hedged.
It'll be a portion. It won't be the lot.
Well, not just that. Like they've actually hedged at a level where now it's actually because gold's risen so much, whereas before they had hedged, but the gold price had never hit that.
Yeah, I think the average hedge is 4,000.
Yeah, so
4,000 Aussie.
Yeah.
So they're still killing it. Don't get me wrong, but and probably in this grand scheme of things, it's not a gold mining CEO's job to speculate on, on markets. So they should be. It's responsible to be locking that in. I think it's a bit loose from Newmont to have just a blanket policy that they announced in 2007, but they said we're never doing it again.
Yeah, but it makes sense as well. Like if you have a certain amount of cash burn, like if you just hedge off say 20% just to lock in that income, you're like, okay, well,
you're a genius if it comes back.
Yeah,
but again, maybe run the gold mine. Don't try and be a trader. I think it's probably like where and a lot of these guys. I mean, agricultural guys do it as well. But it was a great season back in the early 2000s in Australia, and it was like I'm not going to say where I heard this, but basically they had a very effective commodities broker in this particular region, and the farmers had a record crop and dusted the entire profits, buying the Aussie dollar. I can't go below 60. I can't go below 50. And I got to like 47 or something. And so you worked your absolute butt off.
Yeah.
And had a record crop, and then
and punted it away.
You're aggressive. You're overly aggressive. Commodities broker who's just a bloke sitting in an office in a country town somewhere, who is probably getting that. Like this is 25 years ago. Probably getting it via fax on a daily basis. So. Yeah, so there's stick to what you're good at, basically. I guess the point of that story is.
What's the next slide? I think it's a trade of the week.
I would imagine it is. Bitcoin, yeah.
Yeah, so if you are on the alpha list, you got this email yesterday. So EBTC, if for all of those that want some Bitcoin exposure, it's the easiest way. You can buy it on your stock account, and it's apparently you can convert it to Bitcoin. I've heard about that, but I haven't actually tried it. But either way, the way I saw it, so that was the entry price at 1480 yesterday, and it's popped today. But for me, the key was all these lows here.
That's it. It does trade well technically.
Yeah, Bitcoin just crawled above that, so I'm like, okay, well, you're going to be where you're going to be wrong. Happy to take that risk, and it just looked like it was crawling higher. And she got in that one day.
And let's face it, there's no fundamentals to derail the technicals. So technicals is really your only guide, I would have thought, and price action.
Which is fine. But either way, it's popped. So what I will do now is probably just put a stop at break even. Don't want to lose on the trade. But if it does run, hopefully Bitcoin can. And my target's around that high there, 1750.
Yeah. That's going to be, that'd be an interesting trade. Like you don't want to be in for necessarily for a long time sometimes because it does whip around, but like,
well, one thing I've noticed with Bitcoin is that when it moves, it moves. And if you just it actually now, because it's matured, I've seen weeks where it just gyrates $4,000 or $5,000, which isn't much. So it's definitely matured, meaning that it doesn't always run and collapse. There are places. So but my thinking is that if it say stalls for 2 days in a row, I'm out.
Yeah. So this is a good example, actually. Like, see here, like it ran, and in the past, this down move here would have been more like that.
Yeah.
It would have come back and retested that gap. This consolidation, that's the new Bitcoin. Mm-hmm. That's the maturity in it now.
Even so, it's tested the lows again here. That's a good base to bounce off. And
it never in the past, like it was super scattered in the past. But yeah, I mean, really good, but a really good thing for price action particularly.
So
I do like that.
I think fear and greed. So that's well, there we go.
We're back to greedy.
Market's greedy.
There you go.
Greedy's good. Yeah, that's straight off today. One thing I have noticed is that like the other indicators are all mixed. So interesting that the overall is greedy, but like you look at these, you've got some extreme fear still.
Oh, that's just the movie. It's still I think.
But I'm just saying, like so a lot of the other times, like when it was in extreme fear, everything was in extreme fear.
Yeah.
Whereas now it's kind of it's a mixed bag. So interesting all.
So the volume that's a volume pickup, obviously, or is it market breadth?
Yeah.
Okay. Right.
Each one's.
So it's a broader rally at the moment.
Yeah, exactly. So everything's explained there. So the put call ratio is still in fear. So they're still buying out there. But the one thing I did catch this week is that so the FX markets are cautious, bond markets are cautious, equities is party. It's so that's the market we're dealing with at the moment.
That whilst I'm not surprised. I mean, I bet I'm 9 from 9. I was bullish last week. But I was pretty happy to be bullish again this week. That concerns me more than anything. I mean, forget the fact. I mean, I went down the rabbit hole of doing all the sums on how much what they've got to pay back, etc. In the US debt, and they're
never going to pay back.
I've had insomnia for 3 days.
They're just going to keep rolling.
But and I've got to say, actually, just as a very big side note, that the more I did the numbers on that, sadly, I'm going to more Trump's plan or broad approach made sense, like because that literally, if they're not nipping it in the bud by 1.2 trillion a year for like 100 years at this current interest rate, that it's mathematically impossible to pay it back. So,
like you should see some of the proposals out there. So, I mean, like at the beginning, Besant was talking about zero coupon bonds for us to actually provide military support. Things like that. Like they know they have a big problem, so they have to come out with some.
Yeah, there's a lot of examples in history where this has happened. Now, the inevitable result is they have to take the debt away. So generally in history, with a lot of empires and all that stuff, they accumulate debt after exuberance. You have two choices: you can either default on the debt or you can inflate the debt.
Yeah,
inflation's always easier than default.
Exactly. So that's why gold and Bitcoin are the easier trades out there. Basically, fiat will keep going lower.
Yep.
So stocks might go higher, but in real terms, I think.
Yeah, in real terms, I think stock market's not as strong as you think.
Exactly. So Nvidia might be $1,000, but then toilet paper is going to be $100.
Yeah,
that's what I mean.
The US dollar, the US dollar in the US stock market, like November last year, in real asset terms, is so much higher than because the US dollar was like 15% higher, was it not? And so they now and then that's where that gold unwind, like in terms of if you were going to price the US stock market in gold, it's probably done a lot further than.
Oh yeah, absolutely.
It's well into bear market.
There's heaps of I've seen charts like that. Basically, you measure oil in ounces of gold, stock markets in ounces of gold, property in ounces of gold, and you just see that yes, central banks have printed, and while the asset values look high and the numbers are higher, in real terms, we're all a lot worse off.
Oh, that's some deep economics, guys. I'm really proud of us there.
Okay, so just on that, what's for next week? Bulls versus bears. Oh, sorry, are you bullish or bearish?
Oh,
I'll go first. Because I've been the worst. I will go bullish for next week.
I'm going to double down on my bear.
Oh, okay. So one bull, one bear, and Mr. Hot Streak. He's actually thinking of it.
I'm going to go bullish. And I'm going to add an extra prediction. I reckon beer and greed next week's 76 in extreme green. I think it's got because we've noticed a bit of a pattern in this. Every time it's gone to extreme fear, and I think
that's when you buy.
That's when you buy. The market's greedy. I don't think it's greedy enough to sell yet. So I reckon that old Monty Python sketch. I think he's got a few more morsels before it blows up. But that makes sense, the greed thing. But I'm just thinking in the context of this time last month, there's not a person in the world that would have picked we'd be back at greed within 30 days. But
no way.
Well, we did, but because we. Yeah,
but the thing is, we're
like the best ever. So
but not just that. We think it's a bear market rally. So
that was a really great point you made this week. Actually, was the speed and the
it was 9 days in a row,
and the steepness of the rally generally only happens in
a bear market.
Yeah. So which is I'm usually good with my little tidbit facts like that, but I love it when I can get a new one like that one. I reckon another, because it's going to be quiet. I think it'll be quiet next week. Trump's going to do a roadshow of trade deals. The investors going to walk out of that the coffee in Switzerland where they happen to be in the same city at the same time, and they'll be like, we're on the path to a trade deal. Then and then we'll see. But see if I can get. It'd be impressive to get double digits. And sadly, nearly all of them have been bullish. Oh, dear. All right, gents, well, that was a good one. We will see everyone next week, I suppose.
Well, thanks for listening.